You have a coin in your portfolio. Not just any coin, but one that for years hung under the Damocles sword of one of the most powerful authorities in the world. The SEC sued Ripple, not for a minor offense, but with the accusation of having sold unregistered securities worth billions of dollars over several years. What happened next is a story that no screenwriter could have written better. And in the end, there is one question that not all investors can honestly answer to this day. Did Ripple really win this fight? And what does that actually mean for you as an investor? What this project has gone through is truly unique in crypto history. For 4 years, companies fought against the most powerful financial regulator in the world. And to this day, there are investors who don't understand what was really at stake. Familiar world, Ripple before the storm, 2012. 3 developers founded Ripple Labs with a clear vision behind it. They wanted to rebuild the international banking system. So they didn't want to replace it, but rather completely rebuild it. SWIFT, the system behind almost every international bank transfer, was slow, expensive, and non-transparent back then, just as it is today. A transfer, for example, from Zurich to Singapore would take 2 to 5 days, involve several intermediary banks, and accumulate fees. Ripple had an answer: XRP, a digital bridge asset designed to process transactions in seconds for just a few cents. And the idea wasn't revolutionary in the sense of a blockchain utopia, it was more pragmatic. That's exactly what interested the banks as well. By 2018, Ripple had gained over 200 financial institutions as partners. Santander, American Express, MoneyGram, the list was truly impressive. XRP reached its all-time high of around $3 in January 2018. The mood back then was truly euphoric. And that's exactly when the part of the story begins that many have forgotten or never really understood. What did the SEC actually want, and why did it specifically target Ripple? The call to adventure, the refusal, the indictment. December 2020, 4 days before Christmas, the SEC files a lawsuit against Ripple Labs CEO Brad Garlinghouse and co-founder Chris Larsen. The accusation: XRP is not a means of payment, but a security. And since Ripple had been selling XRP for years without registering it as a security, this constitutes a violation of securities law. According to the SEC, the damage amounts to over $1.3 billion. The market's reaction was immediate. XRP lost over 60% of its value within days. Coinbase, Kraken, Binance, they delisted XRP and suspended trading. Suddenly, Ripple faced an existential crisis. Not because the product was bad, but because regulatory uncertainty alone is enough to sweep a project off the market. Garlinghouse and Larsen were the first in crypto history to be held personally liable for the sale of a digital asset. Ripple could have resolved this lawsuit differently. Settle, negotiate, or move on, one of those 3. Others probably would have done that. But Ripple didn't do it. Why not? And what it triggered is the crucial part of this story. Encounter with the mentor. Strategy instead of giving up. Ripple could have settled. To be honest, many people expected that. Instead, the company did something that no one in the crypto industry had dared to do until then. It fought. With a comprehensive legal strategy, extensive document disclosure, and a central argument: XRP is not a security. XRP is a means of payment. The Howey test, the legal tool for classifying securities in the US, became the centerpiece of the defense. Ripple argued that XRP buyers on the secondary market do not constitute investment contracts. At the same time, internal SEC documents surfaced, showing that even within the agency there was uncertainty about how XRP should actually be classified. That was the first real crack in the prosecution's case, but the road was still long and the toughest moments were yet to come. Trial by fire. 4 years. That's how long this legal battle lasted. And for 4 years, a question mark hung over XRP, which kept institutional investors away and unsettled exchanges. During this time, something interesting happened though. Ripple kept building. The company expanded partnerships in Asia, the Middle East, and Latin America, regions where the SEC holds no sway. The on-demand liquidity solution, which uses XRP as a bridge asset, was actively deployed in these markets. Japan, Australia, the Philippines, real transactions are being processed there. And not as a pilot project, but as ongoing operations. This is a detail that often gets overlooked in reporting about the legal proceedings. Ripple never stopped being a functioning company during these 4 years, but the decisive moment was still to come. By the way, some time ago I published an in-depth analysis of Ripple's fundamentals in the 10x Elite for anyone who wants to take a closer look at the underlying metrics. Crucial review: the verdict. July 2023. Judge Annalisa Torres announces her decision. The verdict is nuanced, and that's exactly what makes it so significant. XRP sales on the programmatic secondary market, meaning sales through exchanges, do not constitute securities sales. This is a historic moment. For the first time, a US federal court has determined that a cryptocurrency is not a security on the secondary market. However, institutional direct sales from Ripple to professional investors would be assessed differently in some respects. So the verdict was not a complete acquittal. It was a legal distinction that creates clarity, but not absolute certainty for everyone. And this is exactly where the nuances lie. Many people overlooked these in the initial Euro euphoria. What does this verdict really mean? And has it changed the basis for Ripple as an investment reward? What has changed? After the verdict, something happened that hardly anyone had imagined before. Institutional interest in XRP has increased. Not because XRP suddenly became a better product, but because regulatory clarity, even if it is only potential, is truly enough to bring institutional investors to the table. Several XRP ETFs have been filed with the SEC, meaning applications have been submitted. Ripple has rebuilt its own activity around the US market. And the company has announced that it is working on its own stablecoin, RLUSD, which expands the ecosystem with a new layer of application. This is no longer the Ripple of 2020. Rather, it is a company that has worked under maximum pressure for 4 years and is now structurally broader and better positioned than ever before. But, and this is important, that does not mean that all questions have already been answered. The way back and open questions what investors need to know. The 2023 verdict is definitely a milestone, but it is not the end of the regulatory story. The SEC has filed an appeal. Parts of the proceedings are not yet fully concluded. This means there are still residual legal risks that need to be specifically identified. Additionally, XRP carries a structural characteristic that must be critically considered. Ripple controls a significant portion of the total supply through so-called escrow contracts. This way, monthly amounts of XRP are released. This is a dilution risk that no other top 10 project has in this form. Anyone buying XRP is not just betting on this technology. They are also betting that institutional adoption will grow quickly enough to absorb the ongoing supply pressure. This is a realistic assessment and not an attack on the project. But this is exactly the kind of consideration that data-driven investors have to make. Back to the question from the beginning. Has Ripple really won this battle now, and what does that mean for you as an investor? But as always, the answer is a bit more nuanced. Yes, Ripple has won a decisive legal point. 1. The verdict first establishes a precedent. It also signals to the market that XRP can be treated as a means of payment on the secondary market. This is a foundation on which institutional capital can move, and that's exactly what's happening right now. At the same time, XRP is not a risk-free investment. The supply mechanism, the ongoing legal proceedings, and the dependence on Ripple as a central actor are real factors that need to be considered. Must be. The risk-reward ratio of XRP has changed due to the legal dispute and the verdict. The uncertainty is definitely lower, the attention is greater, but it remains a project that you need to understand. And not one of those you just buy blindly. If you want to understand how this development is reflected in the XRP chart and which technical levels are currently truly relevant, then let's take a direct look at the chart now. Let's jump straight into the chart analysis for XRP. As always, we'll first take a look at the current overall situation. If you think about it, for example, this is on Binance. XRP has been around for an extremely long time. Here, where we started, that was in 2016. Then here in 2018, a massive surge. Then at 3.5, by the way, that was the all-time high here. And again here, the all-time high. But in the end, we weren't able to break above it. Then in 2021, it was more of a moderate increase during this bull run. And now currently, if you take a very close look at this specific data point, as you can clearly see, we had almost over a staggering 630% increase. Then it is also worth mentioning that there was more to it. At the top, the 10x indicator formed a big red dot, which means we were overbought because, of course, a lot of people bought in, and then we dropped massively. So what does the current situation look like? Yes, on the one hand, we obviously have a support zone here. That was here on the one hand, and here as well, where we bounce back nicely if it continues to go down. But at the top, we also have a resistance zone. We didn't get above it here, we didn't manage it. It wasn't managed here, it wasn't managed here. Let's see if the next rise comes now, or rather the next attempt. What's interesting is that the 10x indicator has formed a small green dot. That means a bullish possible trend reversal. So it could be that we first rise a bit again now, and then the question is what happens here. Stocks and so on, especially in the AI sector, are currently going crazy in terms of price. Crypto isn't following suit, which means the narrative and retail are currently more focused on that area. Stocks, artificial intelligence, because everything is rising there, of course. Crypto is rather being left aside. So what do I do with XRP now? What would I personally do? At the moment, we are here. According to the 10x indicator, we're more in the middle range. Up here would be an overbought zone, down here an oversold zone. In other words, right now, we're more in no man's land. It's really difficult to make any decisions here at all. I would wait now until we move up, until we have an overbought zone here and a big red dot forms, and then we go back down again. If we then get down here into the oversold zone, which would be here, like for example here, it could be that in the future we drop down here again, maybe a big green dot would form here then. And then I would take a closer look at further in-depth analyses and reassess the situation. By the way, you can find more information about 10x indicator in the video description. It's simply a tool to help with chart analysis because it provides a bit more clarity in the market. If you want to see the complete analysis of XRP, then I recommend this video here. It's really exciting, including price scenarios up to 2030. Thanks for watching and see you soon.